Hello my fellow freedom builders and welcome back to the channel. Today it is Thanksgiving and the US markets are closed and therefore I'll make a little video here about a little Thanksgiving warning. And no, it has nothing to do with eating too much turkey, but if you won't listen to the warning, there might be a little less turkey or a little less money for you because something is happening in the market right now that you should be aware of. Now, this is not a crash warning. It is not me saying that we have a huge 50% crash coming just in the next couple of weeks. Not at all. And if you are a long-term investor and you are putting money into, I don't know, dividend aristocrats or something like that to hold for the next 30 years, then this is not anything for you as well. And you can shut down the video or, of course, stay and listen if you're interested. But just to say, this is mostly for the investors slash traders that are a bit more active and are moving in or out of stocks. So if you are going to buy some stocks just here in the next couple of weeks, you might profit a bit by listening to this as well. Now, what am I talking about here? I'm talking about what level the markets are at. Now, if we are looking at the S&P 500 here, and I know they are closed today, but the futures are running, so we can have a look at them in a second. You can see I put some arrows on here, and what these are is that I have a very simple indicator showing me if the market is very overbought or oversold. And as you can see, it is not like they always hit the market straight and are correct all the time. We have an indicator here showing that the market is overbought, and yet it keeps going up for a while, and then we have something saying it is oversold, and then it goes a bit further down before it goes up, and so on and so forth. So as you can see, just lately here, we got an indication that there might be some selling pressure in the market. And this is all this is. I'll show you the indicator just in a second. But this is not a holy grail of catch the bottom and tops precisely every single time. This is simply an indication. And it is an indication of what mood the investors are in. Every cycle in the market, that can be yearly cycles or weekly cycles, but in certain points of these cycles, the investors tend to get in different moods. And for instance, when we are looking at an area where we are saying that there ought to be some selling pressure, it is not because all the stock shareholders are just selling their stocks all at once. It is just that the market has gone up so much that some investors, maybe even especially the shorter term traders, swing traders and so on, they are looking for excuses to sell. Not that they'll necessarily sell, but they're looking for some sort of excuse. That could be a war started somewhere, or a Brexit election, or it could be whatever. And often it is the excuses for selling is not very obvious, but it's just news coming up. And right now we are at a point where I think that the at least shorter term traders are looking for excuses to sell. Now, how do I figure that out? Well, I have this little tool where this is for the Denmark, Norway, Sweden, and this is for the United States, and this is only for the stocks that I follow. And what we can see here is that we have these three markers here. We have the brown, orange, we have the blue, and we have the green. These show how many percentage of the stock universe I'm following, how large a percentage are above how many of the stocks are above their 20 symbol moving average. And this is the 50-day, this is 20-day, 50-day, and 200-day moving average. So right now in the US market, we can see that 8.5 out of 10 actually, of all the stocks I follow are above their own 200-day moving average. 75%, that's 3 out of 4, is above their own 50-day moving average, and again 76% is above their 20 SMA. We can also see that on the lines here, and we tend to see that when the market has been moving up at least 2 to 3 weeks and then are reaching an area above 60, at least 65, 70, we tend to get some selling pressure. Now, this is one of the indicators I'm looking at. It simply tells us that whenever a lot of stocks have been moving up above their 20 SMA, we tend to get a bit of selling pressure. Now, I'm combining it with another indicator. So here, it was actually not that strong of a sell signal, but I'm combining it with the fear and greed index. And you might know the fear and greed index. I have made some videos about it before. And it measures via seven different indicators here. We have the safe haven demand, we have the put and call option ratios here, we have the stock price breadth and so on. I've explained all of that in the video about the fear and greed index. But what that shows us is where we are on a scale from an extreme fear to extreme greed. And whenever we reach extreme greed, and we are there right now, on a scale from 0 to 100, we are at 91 right now. And when we reach this level, the investors tend to think that it might be the time to take some profit off the table. Whenever we are down here at extreme fear, it is exact opposite. Then the market is simply overreacting to the other side, and it might be the time to start putting some money on the table again. If we go down here, we can see some of the interesting swings. We can see that it reached pretty much an all-time high just around New Year, and we know that the market kept going up for about a month or so, and then it crashed 35%. And when we reached these levels down here, it was about the time to start buying again. Then we reached the level of around the 80 here. We were sent down, and right now we are back up and we are closing in on 100. We are at 91 right now, and combined with the fact that I can see that 3 out of 4 stocks are above their own 20-day moving average, that makes me think that you should be a bit worried about putting on at least short-term position right now. Again, if you're buying stocks for your retirement portfolio and you only need that in 30 or 40 or 50 years, then don't mind about this. Just buy and hold. But if you are a bit more active investor or trader, you might want to have a look at this. Because what I'm using this for is I'm not selling all my stocks just because these indicators are high. I don't believe that we can time it like that and just get in or out of the market at the exact right times. However, I bought a single stock yesterday and I bought one last week, I think it was, but I'm a bit more picky right now. So I'm choosing just the best of the best signals. When we are down in a slump, when we are down here and getting close to 20 here, or we can see that the index is getting very low here, the brown orange line, well, then I get a little less picky. Then I buy the semi-good signals as well. So what I'm doing right now is that I am looking to take a bit of money off the table. And let me show you what I mean about that. I have, for instance, my hype portfolio. And if you've been following me for a while, you know that one where I am leveraged 2 to 1, and meaning I have 20 stocks here. And there are some of these that when the market opens tomorrow, I think I will either sell them completely or take at least some of the profit. We have the Aspen aerogels here. Look at this, how this has been running up. It has been going up since I bought it. It is up something like 41%. It's not 100% certain I'll be selling, but I might go down to a lower time frame. For instance, the 4 hour, maybe the 1 hour if it has been really running fast, and then timing my exit from that. Or I might simply just take the stock off and say, yeah, well, 41% in couple of months, that's actually fair enough. We also have the micro strategy. Look at this one. I bought this one here, and that was just, let me see, when did I buy it? The 3rd of November. So that is 23 days ago. And in these 23 days, it has gone up 56%. So when we are in a environment like we are right now, where everything is being shot up to levels where I can see that people might start to wondering if it has gone up too much and might take some profit off the table, then I'll do the same. I might take the fastest runners and simply maybe sell half of it, maybe the entire portion of MicroStrategy. I have a couple of other stocks as well that have gone up completely crazy here. I can't even remember which one of these it is, but many of them have gone up very nicely. I'm actually up almost 60% now over the last 2.5 months. So that is very nice. But we also saw in the last drop down here that I actually lost a big chunk of the profit. So I'm experimenting a bit with this shorter term swing trading strategy. So to take the swings and then actually exit half of the positions when I can see that everything is overbought. So it's not enough just to have my indicator here saying overbought. I also need this fear and greed index to be extremely high. Whenever it's here in the middle, I'll just take my buy signals whenever I want to. So my warning here is you don't have to go around and be afraid of your retirement fund. But if you are a shorter term trader and you actually want to have some money for the Thanksgiving turkey, then you might consider taking some of your profit off the table. We can also see this in the EV space. We can see it here. Let's just have a look at it. EV stocks here. We can see that the buyers or the investors have been looking for excuses to sell. We can see Blink were shot pretty much down here. We can see that the SPE dropped a bit. There are several of these that have been losing some percentages. We can see Solo here, Electromechanica, was shot pretty much down. It was down 45% from the top. So if you were one of the buyers buying around here, you would be down quite a lot by now. So this is the scenario I'm talking about, especially when you are in hyped stocks where people have been pouring money in without thinking anything about quality or anything. Then this might be the time where you're taking a bit of it off. Now, again, I'm not a financial advisor, so you should do whatever you want to do with your own money. I should not be the judge of that. But this is just my advice and my little Thanksgiving warning. The coming weeks will show me if I'm completely wrong. It might be that something comes up with the Biden administration now that Janet Yellen is the one of the members of his government there. And that really shot the market up because people thought that were signaling some stability and solidity there. And I actually tend to agree. And there can come a lot of things up. Right now, we have the virus that have some really bad numbers coming out in the States, and all sorts of news can trigger a retracement. Now, I don't know if this is a retracement of 5% or of 55%. Nobody knows, and those that claim they do know it are completely full of, I don't know, bullshit maybe. But you have to look after your own portfolio and don't listen to all of these Facebook gurus. I'm just warning you that this might be a time to be a bit worrisome about your portfolio. And as the good old Warren Buffett says, when everybody is greedy, it might be time to sell. And if everybody is fearful, it might be time to buy. So right now, I can see an extreme amount of greed in the market. I can see people putting their money into things that will probably never ever gonna make money, or at least not in the next 5 to 10 years. But it doesn't matter because it's going up with 100% per week. That is not a solid market regime. And I must say that people are so greedy right now that I'm getting a bit fearful. That's all for now. It was not to spoil your Thanksgiving mood, but just to give you a little warning. Take care of yourself and your money out there, and I'll talk to you again very shortly. Bye for now.